Hello and welcome. This is Price Action Triggers 201. Basically, it's part three. I don't even know how we're naming these anymore. So, what I wanted to show was A, how we create price action triggers, and then B, most importantly, right now, because I want to keep it relevant, because I love you, is how we find the best and easiest triggers in this market because there's a little cheat code. All right. So first thing I want to do is talk a little bit about what actually goes into a trigger. So the best analogy that I could think of was kind of like chess. So the chess pieces that we have, what we want are smooth, continuous movements, right? To get us from wherever the price is or the bottom or whatever. So like here, let's say that's our end of the board. We want to get to the other side of the board where it's clean, right? To get between those two sides of the board, this blue line up here being the opposite end, we got to get through all this clutter and shit, right? So what are our weapons to get through the clutter? What are our pieces? We've got basically any sort of long, smooth candle or any gap in price action. Because what we want is, a good way to think about it is we want clean movement. Clean movement is our friend because it means that we've got unfettered room to run on our board. So here, this smooth candle right here, because it's one long piece, to us it's the same as a gap up or gap down. All we care about is space that's unoccupied. So that's why it's the same as this gap up here. That might as well be a red candle in here, where I am with this blue. And that might as well be a gap here, where I am with this red candle. That makes sense. All we care about is clean blue skies straight ahead without clutter. So what do I call clutter? Clutter is like when the board is littered with a bunch of pawns and shit. Like you're playing a drunk uncle or something. He doesn't know what he's doing. It's just like pieces all over the board. Like that's what this kind of price action is. So the pieces that are against us, what we need to move past, are twofold. One is candles with wicks. So like this right here would be a stopping point. This blue wick right here will be a stopping point. That's the first thing that we don't like. So all this, let me take that away. All this is good. Right? Clean, smooth movement, like we said that we like. Whereas this wick, that bad. So that's number one, right? That's like a pawn in our way or like a knight or something. I'm sorry if you don't play chess, but the analogy should be fairly obvious that I'm making. The second one is reversals. These are real bad. A reversal means that the level has failed. The level is a failure. That is a sign that it's going to go down from that level. The third thing we need to look out for, I think I said two before, but it should be three, is multiple points of reversal. And that's real bad. That's like what we try to avoid like the plague. So let's look at this level really quick. Look at this. We've got in this box between 232 and 234, we've got 1, 2, 3, 4, 5 points of reversal. And in case it wasn't clear, I'm on the hourly interval, by the way, right here. You want it on the hourly for this because we're doing day trading and swings. So, if you're trying to fucking get a dividend stock or buy long or, God forbid, a monthly or leave, my lord, you would go with the longer time frame, but it's okay. This is bad. So to review this, 1, wick, bad, reversal. 2, full reversal, red to green, green to red, very bad. 3, multiple points of reversal, wicks. That's just fucking awful. Remember, we want clean movement and we want to avoid clutters. Keep that in mind for what we're explaining, okay? So now it comes time to use these findings. I don't even know which I'm not a fucking scientist. So my hypothesis is that This shit will lead us into figuring out what our trigger is. So, keeping in mind our smooth candles, keeping in mind our gaps, your trigger is the highest point of price action before you hit a smooth candle or a gap. Remember, gaps and continuous candles are the same thing. So what you want to do is find the highest price action before that, looking back between 1 and 3 weeks. 1 week being the most important, 2 weeks being less. 3 is just like to play it safe, but really we're going to focus on like 2 weeks, okay? Let's call 1 to 2 weeks, especially in this market. So this, in this little cluster, this is FedEx, right? This is like my highest point in the price action right there. See? And if you see, it has multiple of those little pawns that we don't like too. We've got 1 point of reversal, 2, 3, 4, 5, 1, 2, 3, 4. A lot of points of reversal in there. And then it's gap, clear skies ahead. So what does that tell me? With each of these reversals, I'm finding out that this is a more important level, right? So logic dictates that if we break this level and we have a gap or a smooth ride, like a continuous candle above, then that should be our area to play in. Does that make sense? So I'm asking you like you could talk back. Does that make sense? Great. So this, it is late. This will be the highest point in our price action. Right there, 241.73. This gap will be our unfettered price action. So the first point of reversal in that would be right here. Where my little pencil's going, this red to green, this or green, red sliver, that's our first point of reversal. If pretended that point of reversal wasn't there, then what would our first level be? It would be this wick, right? Because remember, wicks and reversals, both mutual kind of enemies of ours. So I'm going to start off, I'm going to put my, great, I've got my trigger, and I've got my target, because what you're trying to figure out is your first target with the second line. So let's make this target line gray. So 241.73 to 244.01 on this first week would represent our highest price action, right? Friday to Friday. But wait, hold up. So now we want to know what's happening in this second week, though, just in case, right? Remember, we talked about that. So the first point of reversal in our second week back is actually technically here, right? That's where we first like kind of flip and it goes down a little bit, then it goes back up. So the key thing to remember is the first week is the most important. The second week is less important. Second week going back is less important. It's a level you want to watch, but it's not a target. So I'm looking for anything. I'm following the price action that day, right? At 243.09. That's the second level. I'm watching to see if it like gets caught up or anything like that. So then I know that it's just failing because of that previous level. But for our intents and purposes, we're paying attention to the first week, kind of just keeping an eye on second week action. And although that looks like a reversal, because you see it goes down a little bit, it's followed by a green candle. So that level's actually okay. So this is going to be our first target. Price level 2, 244.01. Now, the second portion of this, when I'm looking here, is determining if this is the FedEx trigger, right? 241.73. Because remember, we identified the height of the price action. So potentially our carry is good to 244.01 from 241.73. At that level, you might want to trim, or you could stay in if you're being greedy, but you don't want to be greedy because then look at this level above. Hella pawns, a bunch of pawns. What does that mean? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It would have to have a shitload of strength to get through there. And then look at this. Second level, second week back. 1, 2, 3, 4, 5, 6, 7. All right, so I'm taking my money and I'm running at 244 on one of this trade. which, you know, A, this is just an example, so it's not like the biggest leap, right? Like I'm not showing you a huge banger. But B, in this market right now, that's up and down, bearish, bullish, it doesn't know what it's doing, you want to make sure that you're taking your trades and getting out. 241.73 to 244.01 isn't a whole lot, but it's like a 25% day trade if you hit it at the right time. So this is actually going to help you probably become a better trader. Anyway, so I practice with some of those. Maybe paper trade practice though. You don't want to be like me. I had to spend a lot of money to learn this over the course of like a couple months. So I want to show you really quick an example of shitty price action. Right? So up until today, I've been watching Pepsi and it sucked. Because look at the past few weeks of Pepsi. Like this is crazy, right? Up, down, up, down, up, down, up, down, up, down, up, down. It's crazy. So that would be an example of like what we don't want to see. Let's try to do one really quick with Pepsi and go up to the top of the price action here. Which to me, over the past few weeks, this would be a top, but this is the top that is before. Remember we talked about, you want to find a before gap or before continuous candle. So this is the top of the price action to me. This is the trigger, and I'm going to show you why on the past couple weeks. Because look at this continuous candle ride. So the wick is our top on this red candle. Let me zoom in. The wick is our top on this red candle. Wicks are tops, by the way, in case I didn't make that clear. So we've actually got all this space to go where our trigger would be. So that is, you're free as a bird from 165.78 to 166.78. So that's a couple points. On a weekly, that's like a, I don't know, 25, 30% trade. You pick the right strike. On a more than a weekly, it's like a 15, 20% trade, something like that. But anyway, the point being that that's free space. So remember, top height of the price action, right? Especially when it gets out this clutter, up until the next wick, up until the next part where the price action gets funky, like this here. Because remember, all these points of reversal in there, you're not going to find a fucking trade in there. So once you break out of this, what does it say? You're out most of the bullshit. All right? So how does this apply to this market? How this applies to this market is I want to show you what happens. Let me see. Here's a good example. We're looking at First Solar. Here's a good example of what happens in this market. You get these drops, right? Like, look at this drop. What happened today? Boom, right? What happened with, I don't know, let me see. Amazon drop, boom, right? I mean, I could just keep doing this. NVIDIA, drop, boom. You see these drops here? Bam. I kind of went a little fast, so I'm going to show you the drops, but like this drop, bam. So these are actually bullish as fuck in a weird way. As far as creating your price action triggers. Why? You get a clear put trigger. Because look at this. See all this space that there is in it? So if you drop beneath the price action of the day on one of these drop days, you're in no man's land. But I want to talk about how these two-way plays also are bullish too, because you get a clear sense after the drop of where your next target is. So I know if 96.79 falls in Amazon, it's in trouble, because look at this. 1, 2, 3, 4, 5 points of resistance. So that's a strong level. So what does it mean if it breaks through? It means a really strong level got fucked up. Now, if the same token, I know what my top is, because look at this, I've got 2 wick reversals at the same point, right? So I know what I'm looking for. I know what I'm looking at. I'm looking for it to fall beneath this level, because I know that that's a support pawn, or I'm looking for it to break above these two. Where am I looking for that to go? Remember what we talked about? The top of the wick that preceded the height of the price action. So look, we've got room to, I don't know, what is that? What is the top of that wick there? 100.4. So 99.2 to 100.4. Again, I'm not showing you like huge bangers right now. I'm just trying to make a point. 99.2 to 100.4, that's green as grass. Now look, that's target one, right? Look at this candle right here, though. If we break target one, we'll break above and hold on a retest. Then we're looking at the next level point of reversal, which would be right here. Because see, this green candle's followed by these after hours gap downs, right? So it's kind of an important level. So now I've got a new target. After target one, we'll look at 102.2, and you keep doing that up. But in this market, you really probably just want to take those little base hits, you know, get yourself 15, 20, 30, 40%, the fuck out. Unless you find plays that are better, obviously. So these opportunities keep happening. So like, look, right? CrowdStrike. What does it do? Drop. Where's the clear ass bottom? Right there. 1 point of failure, 2 point of failure. Our bottom is clearly 188.43. Where's our top? 1, 2, 3, 4, 5. Height of the price action here. Next to this candle, which might as well be a gap, up to the wick. Look, that's actually a good fucking trade. I should I'm gonna put that on my watch list. So if you hit 197.31, your first target is 200.96, but your second target can go all the way up to here, 204.97. Why? Because of this candle right here. It's our first point of reversal. So look at that. That's 7.4. That's 7 points in the trade, give or take 7.5 points. That's serious money on a weekly or, but even a monthly. That's serious money if you're able to pull that trade off when it's happening. So that's what I kind of wanted to show for this, was just that this routinely happens in this market where you get a drop and then you get key levels next to each other. I think I took Stitch Fist off of here, but like I think it was an example. Another one, right? Look at that drop. 1, 2, 3, 4, 5. Like these just keep happening. So you got a really tight play where you know what's going on. So to summarize, price action triggers are created when you hit the height of the price action, and in the preceding week or two, you see a gap or a long candle right up that precedes it, because it's a continuation. Shit like Pepsi here, if you see something like this, that's terrible price action. Just stay away from that. This is all also, I wanted to say, a patience game, where once you have, so here's my like master watch list, right? The master list. Look how many I have in here. So I can literally just scroll through when I need to create my watch list for the next day. I'd be like, okay, Moderna in the Mr. Shitty price action. Not a trade I'm taking. Not something I care about. I'm going to wait until it gets somewhere that's clean, which really looks far as fuck away because of all the weird gaps. Or I might say, let's find something that's ready really quick. I might say, of course, now I can't find one. Of course, I'm talking all that shit. I might say, okay, let's look at Zillow. Look at that. Zillow's flagging, and if it hits 61.19, it's ready. I don't see any price action above it, do you? This thing can run. Let's zoom out a little bit. Right, so it looks like the first, look at that. Maybe take it back a couple weeks. Got your first target here, second target here, third target here. Just easy pickings along the way. So the third part of this I wanted to show you really quick, a little cheat code. If you have TD Ameritrade or anything that helps you scan by gap downs or gap ups, so look, I'm gonna watch this, right? I'm going to go to public watch list on Thinkorswim. I'm going to go to gap down. Now I've got nothing but plays to choose from with that price action. So look, Docu. Right, because I had that shitty ass earnings. What's my top? 143.93. What's my bottom? 131.51. Why? Because this important level will have failed. Why? Because this important level will have been breached. 1, 2. See how it sent it down? And then look, 1, 2. See how it sent it up? So you could just like do this. I mean, I'll pick a Chinese ADR, even though obviously it's dumb to play them right now, which is exactly why I played Baba, because I'm dumb. 1. Gap down. You got room there. Gap down. You got a low right there. You do this shit all day. Baidu. Gap down. There's your top right there. 1, 2, 3. Gap down. There's your bottom. So it makes it super easy, actually, when you have these bear markets. All right? Cool. Good luck.